Have you ever wondered what happens when the world's largest asset manager dips its toes into the volatile world of cryptocurrency? Well, let's take a moment to ponder on that. BlackRock, a name synonymous with asset management, stands as the largest in the world with nearly $8 trillion under its management. A behemoth in its field, BlackRock's initial approach towards the world of cryptocurrency was one of caution. Now let's rewind to the early years of cryptocurrency, specifically Bitcoin. It was a time that saw the birth of a new kind of currency, one that promised a financial revolution but came with its fair share of turbulence. Bitcoin, the pioneer of this revolution, embarked on a volatile journey, its market cap fluctuating wildly, often leaving investors in a state of anxiety. BlackRock, an investment titan, and cryptocurrency, a financial disruptor, seemed like an unlikely pair. But as we'll see, the convergence was inevitable. In the early years of Bitcoin, BlackRock remained on the sidelines. A stance that was not unique to BlackRock alone, but echoed across the financial industry. As the dawn of cryptocurrency brought about a new era of finance, many traditional institutions, including BlackRock, held back, observing the new financial landscape with caution and skepticism. BlackRock's initial stance on cryptocurrency was one of careful consideration rather than outright rejection. The company's CEO, Larry Fink, had a measured perspective towards Bitcoin and other cryptocurrencies. At different points in time, he described Bitcoin as a speculative investment, an indicator of the high risk and uncertainty that surrounded the digital currency in its early days. Fink wasn't completely dismissive of Bitcoin, but he was wary. For him, the inherent volatility, the lack of regulation, and the potential for misuse made Bitcoin a risky proposition. He even went so far as to describe it as an index of money laundering. His statements reflected a belief that Bitcoin, and by extension other cryptocurrencies, were less a currency and more a tool for illicit activity. This perspective was not unique to Fink or BlackRock. It was a sentiment shared by many in the financial industry. The newness of cryptocurrency, its volatility, and its association with illicit activities raised concerns for many traditional financial institutions. The lack of a clear regulatory framework only added to these concerns, making many institutions hesitant to embrace this new form of currency. But, as we've seen time and time again, change is the only constant in the world of finance. And as the years rolled on, Bitcoin and other cryptocurrencies began to gain acceptance. They began to be seen not just as a speculative investment or a tool for illicit activities, but as a legitimate form of currency and a potential asset class. BlackRock's skepticism reflected the broader financial industry's wariness of cryptocurrency, but this was about to change. As the cryptocurrency landscape evolved, so too did the views of BlackRock and the wider financial industry. But that, dear listeners, is a story for the next scene. By late 2017, Bitcoin's meteoric rise could no longer be ignored. The digital currency, once dismissed as a mere fad, was now commanding a market cap that rivaled some of the world's largest corporations. The financial world watched with bated breath as Bitcoin's value soared. Among them was BlackRock, the world's largest asset manager. Initially skeptical, the company could no longer afford to sideline the digital currency revolution. The potential of this new asset class, its unprecedented growth, and the promise of blockchain technology were too enticing to overlook. This was the juncture when BlackRock's interest in cryptocurrency began to peak. They recognized that the blockchain technology underpinning these digital currencies could potentially revolutionize the way financial transactions were conducted. It was clear that a deeper understanding of this technology and its implications was necessary. In response to this growing interest, BlackRock established a working group in 2018. Comprising of members from different parts of the business, the group's mandate was to evaluate the potential of blockchain technology and cryptocurrencies. Their task was to explore the feasibility, benefits, and risks involved in integrating these new technologies into BlackRock's existing operations. This was a significant step for BlackRock. It signaled a shift in their stance from skepticism to curiosity, and then to acceptance. The establishment of the working group demonstrated their willingness to explore uncharted territories. It was an acknowledgement that cryptocurrencies and blockchain technology could potentially be a game changer in the finance industry. This shift was not without its challenges. The volatile nature of cryptocurrencies and the regulatory uncertainties surrounding them pose significant risks. Nevertheless, BlackRock was not deterred. They understood that to stay ahead in the financial world, they needed to be at the forefront of technological innovation. And so, the journey began. A journey to understand, evaluate, and possibly integrate these new technologies into BlackRock's operations. The establishment of the working group was just the first step in this journey. But it was a significant one. It marked the beginning of a new era, an era where BlackRock was not just observing the cryptocurrency revolution from the sidelines, but actively participating in it. BlackRock's shift towards cryptocurrency signaled a new era for the investment giant. As the 2020s rolled in, BlackRock was no longer just observing the crypto space. The world's largest asset management firm was now an active player in this dynamic new field. BlackRock's first foray into the crypto sphere was through Bitcoin futures. Back in 2021, the company started to dabble in Bitcoin futures contracts. This marked a significant shift in the company's stance towards digital assets, as it started to recognize the potential of Bitcoin as an investment asset class. But their involvement didn't stop there. Recognizing the need for a dedicated leadership, the company appointed a global head of crypto assets. This was a clear statement of intent, as it showed BlackRock's commitment to integrating cryptocurrency into their long-term strategy. The global head of crypto assets was tasked with not only managing the company's existing crypto investments, but also exploring new opportunities in the digital asset space. BlackRock's involvement in the crypto world also extended to direct investment in cryptocurrency firms. One of their notable investments was in the company Coinbase, one of the largest cryptocurrency exchanges in the world. This investment was strategic, as it not only gave BlackRock a stake in the burgeoning crypto market, but also provided them with valuable insights into the workings of the crypto industry. With these moves, BlackRock was not just dipping its toes in the crypto waters but diving in head first. They were not merely adapting to the rise of digital assets but actively shaping their future. And the rest of the financial world was taking notice. By becoming a pioneer in the integration of traditional asset management and digital assets, BlackRock was setting the tone for the rest of the industry. They were showing the world that traditional asset management and cryptocurrency were not mutually exclusive but could, in fact, complement each other. By embracing cryptocurrency, BlackRock was blazing a trail for traditional asset managers. They were not just surviving in the new digital age but thriving in it. And in doing so, they were paving the way for a new era in asset management. BlackRock's crypto venture has not only reshaped its own investment strategy, but also the wider financial landscape. The moment BlackRock stepped into the realm of cryptocurrencies, the financial world took notice. This wasn't just another financial giant dipping its toes into the crypto pool. It was BlackRock, the world's largest asset manager, embracing a new frontier. The impact of this move was immediate and profound. BlackRock's involvement in cryptocurrency has had a domino effect on the financial industry. Other institutional investors, once wary of the volatility and risk associated with these digital assets, began reconsidering their stance. With BlackRock leading the way, there's been a significant shift in perception, with cryptocurrencies moving from the fringes of finance to its very core. And it's not just about perception. BlackRock's involvement has brought an increased level of legitimacy to cryptocurrencies. The company's decision to invest in Bitcoin, for example, signaled to regulators and policymakers that these digital assets are here to stay. This has led to a more favorable regulatory environment for cryptocurrencies, making them an increasingly viable option for investors. Moreover, BlackRock's foray into the crypto world has sparked an increased institutional interest in cryptocurrency. Hedge funds, pension funds, and other institutional investors are now looking at cryptocurrencies not as a speculative asset, but as a legitimate part of their investment portfolios. The result? A surge in demand for crypto assets, leading to a significant increase in their market value. Bitcoin's market cap, for instance, has seen an unprecedented rise. But perhaps the most significant impact of BlackRock's crypto venture is on the future of finance itself. The company's decision to embrace cryptocurrencies is a clear indication that the future of finance is digital. It's a future where blockchain technology plays a crucial role, where transactions are decentralized, and where the lines between traditional and digital assets are increasingly blurred. As we look to the future, one thing is clear: the story of BlackRock and cryptocurrency is just beginning. So, what can we glean from BlackRock's journey into the world of cryptocurrency? Well, it's a tale that mirrors the wider financial industry's evolving relationship with this game-changing technology. Initially, BlackRock was skeptical about the crypto world, hesitant to embrace a market seen as volatile and unproven. However, just like the industry at large, BlackRock experienced a change of heart. Recognizing the potential of digital currencies, they've progressively delved into the crypto market. This shift didn't just impact BlackRock, it echoed throughout the financial sector, validating the significance of cryptocurrencies and their place in modern finance. Today, BlackRock's involvement in cryptocurrency serves as a testament to the growing acceptance and integration of digital currencies in mainstream finance. In essence, the story of BlackRock and cryptocurrency is not just about one company's journey. It's a reflection of the broader financial world's evolution. Whether you're an investor, a crypto enthusiast, or just a curious observer, the intersection of BlackRock and cryptocurrency offers a fascinating glimpse into the evolving world of finance.